Hi, this is the third complete comprehensive example for preparation of deceased partner's capital account. Let's go to the example sum. Example sum. Kavita, Leena, and Monica are partners in a firm sharing profits in the ratio of 1:1:3 respectively. Their capital account showed the following balances on 31st March 2012. Kavita rupees 70,000, Leena rupees 65,000, and Monica rupees 2,10,000. The firm closes its accounts every year on 31st March. Kavita died on 30th September 2012. In the event of death of any partner, the partnership deed provides for the following. Point A. Interest on capital will be calculated at 6% per annum. Point B. The deceased partner's share in the goodwill of the firm will be calculated on the basis of 2 years' purchase of the average profits of the last 3 years. The profits of the firm for the last 3 years were rupees 90,000, rupees 1 lakh, and rupees 1,10,000 respectively. Point C. Her share in the reserve fund of the firm will be paid. The reserve fund of the firm was rupees 60,000 at the time of Kavita's death. Final point D. Her share of profit till the date of death will be calculated on the basis of sales. It is also specified that the sales during the year 2011-12 were rupees 20 lakh. The sales from 1st April 2012 to 30th September 2012 were rupees 4 lakh. The profits of the firm for the year ending 31st March 2012 was rupees 2 lakh. We are asked to prepare Kavita's capital account to be rendered to her executors. So let's go ahead with the solution. Solution. Kavita capital account. Left side debit side and right side credit side. We have particulars rupees particulars rupees. Let's begin by bringing down the balance of Kavita's capital account by balance brought down. It says the capital account showed the following balances on 31st March 2012. So Kavita's balance is 70,000 rupees. Next, we'll go to point A. The interest on capital will be calculated at 6% per annum. So let's do the working notes for that. Working note 1. Calculation of interest on capital. The amount of capital 70,000 rupees multiplied by the rate percent, which is 6 divided by 100, multiplied by the number of months Kavita was alive in this accounting period, that's from 1st April 2012 to 30th September 2012, 6 months. So we get the interest on capital as 2,100 rupees. So let's post that in Kavita's capital account by profit and loss suspense account for interest on capital. ₹2,100. Let's go to the next point. Point B. The deceased partner's share in the goodwill of the firm will be calculated on the basis of 2 years' purchase of the average profits of the last 3 years. Then the profits for the last 3 years are given. So working note 2, calculation of goodwill. We have firm's goodwill equal to 2 years purchase of the average profits of the last 3 years, 90,000 plus 1 lakh plus 1,10,000 divided by 3. So we get 2 into the average profits is 3 lakh divided by 3, which is 1 lakh rupees. So the firm's goodwill is rupees 2 lakh. Kavita's share of goodwill is equal to the firm's goodwill, which is rupees 2 lakh, multiplied by Kavita's share in business, which is 1 divided by 5. So we get rupees 40,000 as Kavita's share of goodwill, and this needs to be divided between the gaining partners, Lena and Monica, in that gaining ratio. Since nothing is specified, the old ratio between Lena and Monica will be the gaining ratio. So that's 1:3. So Lena's capital account needs to be debited with 10,000 rupees and Monica's capital account needs to be debited with rupees 30,000. So let's post that in the partner's capital account, Kavita's capital account by Lena capital account 10,000 rupees by Monica capital account 30,000 rupees. Point C, her share of reserve fund in the firm will be paid, and the reserve fund was rupees 60,000 at the time of Kavita's death. So by reserve fund account, ₹60,000 multiplied by Kavita's share in profits, which is 1 by 5. So we have 12,000 rupees. The final point D, her share of profit till the date of death will be calculated on the basis of sales. The sales of the previous year is given as 20 lakh and the profit for the previous year is 2 lakh rupees, and sales for the current year up to 30th September 2012 is given as rupees 4 lakh. So let's go to the working note 3. calculation of Kavita's share in profit up to date of death. We'll begin by calculating profits from 1st April 2012 to 30th September 2012 is equal to 2 lakh is the profits for the previous year divided by the sales for the previous year multiplied by sales for the 6 months ended 30th September 2012. So we get rupees 40,000 as profits for the 6 months ended 30th September 2012, and Kavita's share of profits is equal to 40,000 multiplied by Kavita's share in profits, which is 1 by 5, equals rupees 8,000. So let's post this also in the capital account of Kavita by P&L suspense account 8,000 rupees. This is for the share in profits. All the entries are done. We'll balance the account and transfer the balance to Kavita's executor's account. The greater total 1,32,100 rupees, and the amount transferred to Kavita's executor's account is 1,32,100. I'll remove the split. We can view the entire answer. So this is the solution, Kavita's capital account. Followed by the working notes. First working note, calculation of interest on capital. Second working note, calculation of goodwill. And the last working note, calculation of Kavita's share in profit up to date of death.